The empire that owns your future began in plain sight, hidden behind your retirement plan. By 2025, two firms managed assets worth over $20 trillion, influencing housing, tech, energy, even elections. When private algorithms hold more sway than presidents, who really governs the next century? Let's find out. Power doesn't always come with a crown or a flag. Sometimes it hides inside a spreadsheet that moves trillions before sunrise. The empire that owns your future began quietly, not with conquest, but with compounding interest. In 1988, Larry Fink sat in a small Manhattan office, still haunted by a $100 million loss from his Wall Street days. That failure pushed him to build something different, a system that could see every risk before it struck. He called it BlackRock, and within a few decades, it became the largest asset manager in history. By 2025, BlackRock controlled over $10 trillion, more than the GDP of Japan and Germany combined. But BlackRock didn't rise alone. In Pennsylvania, another silent titan shaped the market's foundation, Vanguard. Founded by John Jack Bogle in 1975, Vanguard changed investing forever by creating the first index fund. It allowed ordinary people to buy the market instead of betting on one company. Over time, that simple idea gave Vanguard quiet power over nearly every major corporation. By 2023, it managed more than $8 trillion and was the largest shareholder in most of the S&P 500. Therefore, while politicians debated laws, these firms accumulated ownership. Through retirement funds, ETFs, and pension plans, they became the unseen landlords of modern capitalism. Apple, Amazon, Coca-Cola, JP Morgan all share the same two names at the top of their shareholder lists. However, their influence reaches far beyond stocks. During crises, governments turn to them for help. In 2008, the U.S. Treasury asked BlackRock to manage toxic assets. In 2020, during the pandemic meltdown, it was again hired to stabilize the credit markets. That's when many realized these firms didn't just invest in the system, they were the system. So how did quiet offices filled with analysts and algorithms end up shaping wars, housing prices, and climate policy? Because the modern empire doesn't need soldiers or speeches, it needs ownership. And the most powerful ownership today doesn't come from kings or countries. It comes from index funds and data platforms that decide what the world builds next. The question now is, who programs this empire's mind? And who really benefits when it grows? Every empire begins with one architect. In this case, it started with a man who once swore he would never touch Wall Street again. Larry Fink had lost everything in 1986. One wrong bet on interest rates cost his firm $100 million and his reputation. That failure didn't end him, it shaped him. He realized money wasn't just about luck or skill, it was about control of information. So 2 years later, in 1988, he built a company that turned risk into science. He called it BlackRock, and inside its core, he created something extraordinary, a digital brain known as Aladdin. Aladdin could track every trade, every movement, and every pattern in the global economy. It didn't sleep or guess, it calculated everything. By 2025, the single system analyzed over $21 trillion in assets, more than the GDP of the entire planet in 1990. Governments began to notice. During the 2008 financial crisis, when the world economy froze, it was BlackRock that stepped in to manage the toxic mortgage assets choking the system. The U.S. Treasury trusted them with decisions worth hundreds of billions. The European Central Bank soon followed. Then came the pandemic bailout of 2020, where BlackRock again designed programs to stabilize global credit. However, here's where things turn strange. The same company advising governments also managed the very corporations those bailouts saved. Fink called it efficiency. Critics called it conflict. Yet few questioned it, because Aladdin kept working, predicting risks before they spread. By 2023, the system influenced nearly every corner of finance, pensions, housing markets, even climate policy. When the Federal Reserve wanted to test digital asset frameworks, they consulted Fink's team. When Europe debated carbon pricing, Aladdin ran the simulations. Therefore, a single algorithm began guiding decisions that once belonged to parliaments and central banks, learned faster than regulation, scaled further than any government office, and never asked for permission. So what happens when the tool meant to manage risk starts shaping reality itself? And what if the next chapter reveals that this machine isn't the only one running the world's money anymore? There's a quiet moment when influence stops being visible. It no longer needs speeches, headlines, or handshakes, because it already sits behind every decision that matters. That's what happened when two firms stopped competing and began owning everything worth owning. After 2010, the age of active traders started fading. Algorithms and index funds replaced gut instinct with data. Vanguard perfected it, letting ordinary people invest without thinking. By 2025, it managed more than $8.5 trillion, and almost every major company on Earth had its name listed among the top 3 shareholders. From energy to entertainment, Vanguard held a piece of everything. BlackRock followed the same path, but with more speed and reach. Its system, Aladdin, connected over 200 financial institutions and processed trillions in real time. It wasn't a company anymore. It was an operating system for global money. Banks, governments, hedge funds, all used it. And once you plugged in, you couldn't unplug. Therefore, what began as two firms helping investors manage risk turned into something far greater. Together, they controlled shares worth over $20 trillion, more than the GDP of every nation except the United States and China. That means if they shifted even 1% of their holdings, markets could rise or crash overnight. However, their reach didn't stop with companies. Through pension funds, insurance portfolios, and exchange-traded funds, they now influence the daily lives of hundreds of millions. Your retirement savings, your mortgage rates, even your grocery bill, all trace back to the same balance sheets. So when analysts joke about BlackRock and Vanguard owning the world, it's closer to truth than myth. Yet very few understand what this really means, because ownership is no longer about property. It's about influence, and influence has no borders. The next question grows larger than finance itself, because the next chapter reveals how this quiet ownership started to reshape policy, energy, and even national security through a single project valued at over $50 trillion. But who gave them the permission to redesign the future? By the early 2020s, something shifted. The same firms that owned the market started to own the mission too. They moved from money to meaning, but meaning backed by numbers so big, it bent governments. Larry Fink began sending his famous annual letters to CEOs, urging them to focus on sustainability and ESG, environmental, social, and governance goals. Sounded noble, and at first, many applauded him. But behind those words stood $10 trillion in voting power, enough to change how entire industries worked. In 2019, BlackRock pledged to stop funding companies that produced coal. Within a year, coal giants lost over 25% of their stock value. Then came oil and gas. Fink said, "Climate risk is investment risk." Markets listened. Politicians followed. Therefore, investment decisions started shaping energy policies more than elections ever could. Vanguard joined the same mission, pushing companies to follow climate targets and diversity rules. Together, they became the enforcers of the new economy, one built on clean energy, social governance, and algorithmic accountability. Yet, here was the quiet contradiction. They still held massive stakes in oil, weapons, and big tech. The same portfolios funding the green future were still earning billions from the old world. However, this was only part of the shift. By 2023, BlackRock and Vanguard began investing heavily in AI-based finance, systems capable of predicting human spending, policy outcomes, and even social sentiment. Through partnerships with data firms, satellites, and fintech startups, they gathered a view of the global economy that no government could match. Then came digital currency. Central banks began testing national tokens, programmable money. And guess who was advising them? The same financial giants managing the world's wealth. Therefore, they were no longer just observing the economy. They were designing its software. So here's the question. What happens when digital money becomes programmable, and every transaction can be traced or frozen by design? Because the next part of this story exposes a $100 trillion plan to merge finance, technology, and governance into one system. And it's already being tested. Some revolutions happen quietly, in server rooms, not on battlefields. The most important shift in finance began when money stopped being managed by people and started being managed by machines. After 2015, investment decisions that once needed teams of analysts started running through artificial intelligence. Algorithms learned patterns faster than any human trader could. BlackRock's Aladdin already handled over 200 million financial calculations a week, but the next generation went beyond prediction. It began adapting. These systems learned which headlines moved markets, how investors reacted to fear, and how governments responded during crises. Then they started simulating outcomes thousands per second, testing everything from oil prices to election results. By 2024, more than 60% of global trading volume was generated by machines with no emotion, no bias, and no pause for doubt. However, the line between technology and authority started to blur, because whoever controlled the algorithms didn't just forecast the future, they began shaping it. If a $1 trillion AI decided a company's stock looked risky, its fall became reality within hours. That's not analysis, that's creation. The public rarely saw any of it, but inside those systems sat information that even governments envied. Consumer behavior, credit flow, even climate models, all under one network. Therefore, decisions once made by central banks or parliaments were now being influenced by a few data centers with restricted access. Larry Fink once said in a 2017 interview, "Markets today move on perception more than fundamentals." He meant it as a warning, but in truth, it was a confession. The perception was being generated by the very technology his firm helped design. Then came the shift toward predictive governance, where countries began using private financial data to plan economic policy. The same models used to price stocks started deciding national budgets. So what happens when machines that manage money begin deciding who receives it? And how far would a single firm go to secure the next frontier of human behavior, when that frontier already involves biometric data, identity tracking, and digital ownership worth trillions? Money used to follow invention. Now, invention follows money. The modern financial empire no longer waits for industries to rise. It designs them first, funds them next, and owns them forever. After 2020, investment stopped being about products and turned toward prediction. BlackRock and Vanguard began pouring billions into future sectors: AI infrastructure, climate tech, digital identity, and green energy grids. By 2025, together they managed portfolios worth over $20 trillion, tied to projects that didn't yet exist. It was less about what people needed and more about what the system could make people depend on. They backed carbon credit markets that would soon be worth $100 billion annually and quietly bought stakes in companies building the software to measure emissions. Every transaction became part of a larger design, one that could decide who gets access, who pays, and who qualifies to live sustainably. However, the real breakthrough came with data ownership. Every click, every payment, every smart meter reading had value. Therefore, they invested in firms collecting it all, from energy networks in Europe to biometric payment systems in Asia. What used to be personal became programmable. It wasn't conquest through land or weapons, it was ownership through algorithms. Governments relied on their models to predict growth. Cities partnered with their funds to finance infrastructure. Even defense industries leaned on their capital to modernize. Therefore, the boundary between private and public blurred into one long spreadsheet. In 2023, BlackRock joined global talks on digital ESG scoring, a policy that could someday link spending patterns with environmental ratings. The idea sounded noble, but the technology behind it could track every financial move a person made. So while the public debated freedom, the infrastructure for economic obedience quietly came online. Then came the most delicate phase, where finance started merging with biology. The same firms funding green grids began investing in biotech startups mapping human data. Because what happens when the empire that owns your money decides it also wants a share of your body? Through patents worth hundreds of billions, every generation thinks it understands who runs the world until it looks closer. What we call the market today is no longer a battlefield of competition. It's a network of ownership so dense that almost everything connects to the same two hands. By 2025, studies showed that BlackRock and Vanguard together held stakes in over 88% of the S&P 500. From energy to entertainment, food to pharmaceuticals, their fingerprints touched everything from Apple to Pfizer. The idea of choice started to look like a carefully managed illusion. They called it diversification, but the outcome was concentration. Every brand on a supermarket shelf led back to the same shareholders. Every tech company claiming independence had the same boardroom investors. Therefore, competition quietly became coordination. The irony? These firms didn't need to issue commands. They guided the market through influence, data models, board votes, and subtle policy nudges. A meeting in Davos could shift global housing prices faster than 1,000 factories opening or closing. However, the influence went beyond money. In 2024, global regulators admitted that asset managers had become systemically significant institutions, meaning their failure could break the world economy. Yet those same regulators often came from the same firms. Larry Fink's annual letters to CEOs started reading less like advice and more like instruction. Their algorithms forecast consumer behavior with frightening precision. If people reduced meat consumption, they didn't lose profit. They had already invested in plant-based alternatives. If cities banned cars, they had stakes in battery companies. Therefore, change never felt random. It felt planned. But every system that grows this large meets its paradox. When ownership reaches every corner, where does accountability live? Governments can be voted out, corporations can fail, but who votes out a network of funds that owns the vote itself? So as the decade closes, a quiet question grows louder. What happens when the same investors funding clean energy, digital currency, and aid defense begin shaping international law itself? And what if the next financial crisis isn't a crash at all, but a reset carefully managed by the very empire that built it? Power once ruled through armies and flags, now it rules through data and debt. Click the next video before it disappears. It reveals who really holds your future.